How's it going, everyone? Thank you so much for joining me today. I have a pretty interesting topic
that I'm going to touch on.
And then I'm going to talk a little bit about the gold standard and how a proper gold or silver standard or whatever would work. So apparently, Trump wants to appoint a gold standard advocate to the Federal Reserve Board of Governors. And her name is Judy Shelton. And I have an article right here out of CNBC, and it's written by Thomas Frank, and it talks about it a little bit. And I chose this article. There's a whole bunch of articles online out there about this, but I chose this article because it was brief and to the point. So the title of this article is Trump's Fed Pick Judy Shelton is a fan of the gold standard and other unusual economic policies. Oh yeah, of course, because the system that the world has used for the past thousands of years is unusual. Well, I can make the argument that using digital ones and zeros as money, that is unusual, considering this world's monetary history for the past few thousand years. So let's get into it. It says, President Donald Trump tweeted on Tuesday his intention to nominate Judy Shelton and St. Louis Fed economist Christopher Waller as Federal Reserve Board governors. Judy Shelton, who serves as the U.S. Executive Director at the European Bank for Reconstruction and Development, whatever the hell that is, wrote as recently as last year in support of pegging the dollar to gold prices. Questioned in a recent interview with Wall Street Journal opinion page whether the U.S. Central Bank should lower rates, Shelton said, the answer is yes. So right off the bat, something's weird here, because she's an advocate for the gold standard apparently, but she thinks the Federal Reserve should cut rates. That is, in my opinion, an improper belief. In order to get economic growth, we need savings and investment, and since we have very little savings right now, interest rates should rise to entice people to save. That is how a normal, untampered with economy operates. So if we had a free market right now, interest rates would most likely be a lot higher than they are right now. Anyway, continuing with the article. In tapping Judy Shelton to become one of the two Federal Reserve Board governors, President Donald Trump selected one of the minority of mainstream economists supportive of a return to the gold standard and critical of central bank activity. Shelton, who serves as the U.S. Executive Director at the European Bank for Reconstruction and Development, wrote as recently as last year in support of pegging the dollar to gold prices. Trump announced his intention to nominate both Shelton and St. Louis Fed economist Christopher Waller via tweet on Tuesday. Trump tweets, I am pleased to announce that it is my intention to nominate Judy Shelton, Ph.D., U.S. Executive Director, European Bank of Reconstruction and Development, to be on the board of the Federal Reserve. Shelton's unorthodox monetary beliefs will likely draw questions from Senate lawmakers who will ultimately need to approve Shelton and Waller to the Fed board. Yeah, good luck getting her past Congress. Well, actually, considering that most Republicans in Congress today, their tongues are so far up Trump's butt because they want to remain politically popular, maybe there is a chance that she'll get approved. The article continues, in a post published by libertarian think tank Cato Institute in 2018, Shelton drew a comparison between cryptocurrencies and gold. Shelton has said, quote, if the appeal of cryptocurrencies is their capacity to provide a common currency and to maintain a uniform value for every issued unit, we need only consult historical experience to ascertain that these same qualities were achieved through the classical international gold standard, she wrote. Well, that makes some sense. It makes sense that using a global money would make international trade easier. Not that we should be using a global money that's controlled by government. I mean, we should be using a global money that's controlled by free people of the world. She also states, in proposing a new international monetary system linked in some way to gold, America has an opportunity to secure continued prominence in global monetary affairs. I'll have to agree with that. It says the choice of Shelton may hint at Trump's growing frustration with Fed leaders at the direction of the central bank's monetary policy. Trump has argued that higher interest rates and so-called quantitative tightening have capped GDP growth and dampened the U.S. position in trade deliberations with Beijing. Two previous Trump nominees, Stephen Moore and Herman Cain, bowed out of consideration after it became clear their confirmation process was in jeopardy. Shelton, no fan of the Feds, recently argued against an overly active central bank. Questioned in a recent interview with Wall Street Journal opinion page whether the U.S. central bank should lower rates, she said, "The answer is yes." Shelton states that when you have an economy primed to grow because of reduced taxes, less regulation, dynamic energy, and trade reforms, you want to ensure maximum access to capital. She told the Journal, the Fed's practice of paying banks to keep money parked at the Fed in deposit accounts instead of going into the economy is unhealthy and distorting. The rate should come down quickly as the practice is phased out. So what she's talking about here, and I've discussed this in a previous video, she's talking about the interest that the Fed pays on reserves and excess reserves. Remember when I talked about basically the Fed is keeping a lot of the money that they injected into the economy hostage at the Fed? And the way they are doing that is by paying banks not to lend it out. That's what she's talking about here. She thinks that's a bad thing, and the Federal Reserve needs to lower that interest rate to entice banks to start lending that money out, to create more inflation through the fractional reserve banking system. Now, I've said before, Trump is a confusing guy. And it seems like this person, Judy Shelton, is also pretty confusing because she's obviously confused economically and monetarily. She's confused. Because when she says the Fed's practice of paying banks to keep money parked at the Fed in deposit accounts instead of going into the economy is unhealthy and distorting, that is incorrect, because what distorted the economy was injecting the money into the banking system in the first place. That is what distorted the economy. If we wanted to prevent the economy from getting distorted, then we would have let all of those banks fail, all of those institutions fail and go bankrupt because they made bad business decisions. That is how a free market works. In a free market, if banks engaged in business decisions and business activities which led them to go bankrupt, and there was nobody with a printing press there to bail them out, eventually banks would realize that they shouldn't be engaging in those business activities and those business strategies. They wouldn't be engaging in fractional reserve banking, which is the root of our problem, if we had a free market, because they would not be able to meet their depositors' demands and they'd go bankrupt. And only banks that ran a sound and honest business would survive. And those would be the only banks that people would use, banks with good reputations of honesty and not lending out your money without being able to give it back to you on demand. But the answer is not cutting rates and allowing that money at the Fed injected into the economy to flow out into the economy. That is not the answer. The answer is to suck. This is part of the answer, not the whole answer, but part of it is to suck as much of that money back out of the system as you can. And they won't be able to get all of it out, but they should try to suck as much of it out of the market, out of the banking system as they can, and face the consequences of their actions. And unfortunately, the American public has to face the consequences of their ignorance to our monetary system, and by voting people in the office that is allowing this stuff to happen. We have to liquidate the debt, let the people who made bad business decisions go out of business, and then we can go back to using sound money, right? We could do this, in some sort of process. I don't know the exact process that it should be. I wouldn't have all the answers, but this is what we have to do, and we have to go back to sound money, and then we have to start saving, right, and investing. That is how we are going to fix our economy. And if banks want to lend out money, they have to raise interest rates to get people to save the money and deposit it in the bank so they can lend it out. That's what we need to do to get real economic growth, to get this Federal Republic on a strong economic footing. We need to let interest rates rise to their market rate, which no one knows what it is. Jerome Powell does not know what it is, all right? But anyway, all this talk about the gold standard, now we have to realize, going back to some sounder money system than we have right now is inevitable. Right? This is not going to work. Government and central bankers thinking they know what interest rates should be and buying assets accordingly and creating money accordingly, that's not going to work because they don't know what the interest rate should be. Interest rates should be determined between the supply of money that banks have to loan out and also the demand to borrow that money, and also the competitiveness between banks. All right? These are the things that should be determining interest rates. And if we want to fix our economy, that's what needs to happen. But if we just go back to a gold standard or whatever standard, if we don't do it right, okay, then we're going to go back to the same problems that we had in the 1800s and the 1900s. Most people think gold and silver didn't work as money because it's just there wasn't enough of it or whatever. It's a barbaric relic, you know. There were all kinds of problems like panics and bank runs and all kinds of stuff and shortages, quote unquote shortages of gold and silver. These were all caused by government intervention. It has nothing to do with gold and silver being money. In reality, the United States have never had a free monetary system. Never. That's why we've always had problems. But unfortunately, politicians and bankers have been able to convince people that those problems have stemmed from gold and silver themselves rather than government intervention. And another point I want to make is there is no such thing as a proper gold standard, okay? The government should not be involved in our monetary system or our banking system at all. There should be complete separation. It should not be the government telling us what to use as money. It should be us deciding freely what to use as money, and the government should be willing to accept whatever we use as money as taxes. It should not be the other way around. So a few points I wrote down just to give you a clear understanding of why the gold standard or the bimetallic standard did not work properly throughout history. So one, let's just go back to this term talking about a proper gold standard or proper whatever standard. In order to have a proper monetary standard, my first point, it would have to be a parallel standard. Throughout American history, when we were on the bimetallic standard, okay, the ratio in gold and silver was fixed. Now, when they would fix these ratios, they would fix it to the current market ratio. But over time, you know, the ratio would get out of whack. Either it would move in gold's favor or it would move in silver's favor. And this would cause Gresham's law to remove all of the undervalued money, whether it be gold or silver, out of the market. And they would sell it abroad for a profit. What we need is a parallel standard. So the value of gold and silver needs to be freely fluctuating according to their own supply and demand. They can't be fixed. That makes no sense. And this would get rid of the problem of quote-unquote shortages of gold and silver if they were allowed to freely fluctuate. This is how it was done in the colonial era. Gold and silver were allowed to freely fluctuate according to their own supply and demand, and there were no shortages of gold and silver until the colonies started printing paper money, right? And the paper money that was printed by the colonies drove the gold and silver out of circulation. But of course, it was blamed on the gold and silver. So that's the first mistake that we cannot go back to doing if we go back to a gold standard or whatever standard, bimetallic standard. Those do not work. It needs to be a parallel standard. And also, if the market decides that they want to use something else as money, say they decide they want to use cryptocurrency as money, or maybe all three, cryptocurrency, gold, silver, maybe even copper, whatever. These ratios cannot be fixed. And if people want to use cryptocurrency as money, the government should be willing to accept it. Okay, point number two. It needs to have 100% backing. So no more fractional reserve system. That is why we've had all these panics and bank runs throughout history. It's because banks lend out the money when the person who deposited it expects it back on demand. So they go to take out their money and the bank's like, oh, we don't have it. We lent it out. This system would not work in a free market. Right? These banks would go bankrupt if they did that in a free market. If there was no government bailouts, right, if there was no government suspending specie payments or payments in gold and silver, the banks would fail. And that's what they should have done throughout all of history. They should have let the banks fail. Instead, they refused to, the government refused to defend the property rights of their citizens and allowed banks to commit fraud and pay back their depositors in pieces of paper. And I'm not saying banks shouldn't be allowed to lend money out, but if they want to lend that money out, then the depositor needs a clear understanding that they won't be able to withdraw that money for a certain amount of time. So it could be like a certificate of deposit or a time deposit. You're not allowed to withdraw that money for a certain amount of time because the bank has lent that money out. And CDs, would pay an interest rate because you're letting the bank lend out your money and they're making a profit off of it, so you need to get your cut as well. But if you want a demand deposit, then you should have to pay the bank to store your gold and silver. If you want to be able to withdraw it at any time, then the bank can't lend that out. And the bank can't just hold your gold and silver for free, so therefore they need to charge you a holding fee. You should only get interest on your bank account if you have a time deposit, if your money is being lent out to a borrower. And the bank should not lend your money out if you have a demand deposit, because they can't guarantee you that they could give you that money back on demand, and this will lead to bank failures.
Okay, point number 3. No laws restricting the type of gold and silver that we are allowed to use.
Gold is gold. Silver is silver. Foreign gold and silver should be fine, or private gold and silver should be fine. It shouldn't have to be minted by the U.S. government. And this is how it was early on in this country's history. It didn't matter if your money was minted by the U.S. government. All right, most people in the early 1800s, the most common form of money was the Spanish reals, which was a Spanish silver coin, not American, and the U.S. government would accept foreign coinage as payment for taxes. It doesn't matter who it's minted by. And to say that we can only pay taxes or use gold and silver that was minted by the U.S. government, that just gives the mint a monopoly on coin minting, which is not good. And it just makes it easier for the government to debase the currency when they are in charge of minting it. The truth is, the U.S. Mint should not even exist, but that is just getting into a whole nother topic that I don't have time to talk about. We don't need the U.S. Mint to exist, in a nutshell. The market is completely capable of minting coinage, and we even have proof of that throughout American history. There was privately minted money. That is a service that the market is completely 100% capable of handling on its own. All right, here's another one. Now, this is just all stuff that I've thought of on the top of my head in about 10 minutes, so I'm sure there's some points that I'm missing here and there. But another point, the gold and silver, if we go back to any kind of standard, whatever, gold standard, silver standard, parallel standard, the gold and silver has to be traded by weight, not denomination. Over history, our coins were accepted by their denomination, not by their weight. Any experienced constitutional silver stacker out there will tell you to not buy slicks because you're paying for their face value, when in reality the silver content has worn down on the coin and the coin weighs less than it used to. It's not that those coins can't be used as money anymore, but if you want to use them as money, they have to be measured according to their actual weight. And throughout history, this has also caused a shortage. So since we went by the dollar, right, and not the weight of the silver or the actual weight of the gold, this would cause shortages. This would cause Gresham's law to remove all the unworn silver out of circulation and only the highly worn silver would remain in circulation. So why would you want to spend an uncirculated silver coin with its full weight on it for the same value as a slick coin with less silver weight in it? You would not want to. You would want to only spend the silver that is worn and overvalued, and you would want to keep the undervalued silver. Different times during U.S. history, we had a problem with having too many slick coins, underweight coins in circulation. It's not that we had a shortage of uncirculated silver coins. It's just that why would you want to spend an uncirculated coin when you could spend a coin that weighs less for the same value? And all this stuff I'm talking about can be proven throughout history. You just have to read history, all right? Read Murray Rothbard. This dude knows what he's talking about. And you can read all of his books for free on Mises.org. You got to read History of Money and Banking in the United States. Read America's Great Depression. All right? Read What Has the Government Done to Our Money. These are all books written by Murray Rothbard. If you read these books, and like I said, they're free on Mises.org, I'll leave a link in the description. If you read all these books, you will have such a higher level of understanding about money, about history, than virtually 99% of people that exist. So anyway, like I said, the return to sounder money is inevitable. The fact that this is being talked about is a great thing. It is a great thing, and we have came a long way since before Ron Paul. I mean, before Ron Paul, barely anyone even knew what the Federal Reserve was. So we have come such a long way in such a short amount of time, and I have a lot of optimism that we will return to sound money one day. But Trump is confusing, and maybe he does have this large master plan of returning to sound money, but I'm still sort of leaning towards the idea of him being an economic illiterate. But the fact that we're talking about this right now, the fact that we're talking about actually moving back to sound money is just amazing. And I have no complaints. It's just, let's just be skeptical, though. That's all I have to say, is just be skeptical. And really what we need is complete separation of government and the banking and monetary system. So thank you so much for watching, everyone. Last video, at the end of the video, I promised to give away once I hit 1,000 subscribers, and I did. So thank you so much for that. Thank you for your support, and I will do a giveaway soon. And remember, I'm just a 26-year-old guy that reads about economics and history when I have time. So if you want to be taught by true experts, of people who actually understand economics and history more than anyone else, more than me, then check out my affiliate link in Tom Woods' Liberty Classroom, where you will learn about all the stuff that I just talked about in this video, plus much more. And they will be able to do it in a more articulate and detailed way than I can. So if you want a high quality education for a very low cost, check out my affiliate link in the description below to Tom Woods' Liberty Classroom, and that any purchases through that link goes to support this channel. And thank you so much for watching, everyone. I'll talk to you later.